the tax loophole that is imploding the industry that brings the most footfall to the entire high street. As you can see, using the government's own calculator that they've usefully provided, you can see why hairdressing and beauty businesses are choosing to change their business model in order to survive these tough times. We're not here to blame people for changing business model, but to demonstrate in this video too why the enormous imbalance is happening and therefore how it's unintentionally destroying the industry that we all love. We believe that the HMRC and government need an urgent review of the tax system, and in video 3 we'll be sharing our carefully thought through proposals and the suggested solutions to protect the current and future generations. So let's get into video 2, why salons are forced to change their business model. So let's compare these two hairdressing businesses this time on the high street and show you what the punitive effect or the punishing effect of registering for VAT is for those businesses. So business 1, it's not VAT registered. The non-VAT items are the same for both. It's 60% salaries, 10% rent, 2% rates, 8% fixed costs, and that's a total of 82%. And then we see the VAT charged items here are our COGS, cost of goods sold for the shampoo and conditioner and so on we use, and 7% fixed costs for utilities, and that totals the other 18%. Now business 2 is VAT registered, but are its costs any different? No, they're not. They are exactly the same. As you can see, 60% salaries, 10% rent, 2% rates, 8% fixed costs, 82%, and the VAT charged items are the same as well. These two businesses are, for all intents and purposes, and for this comparison, the same. They're both turning over £89,999. So let's see what happens. We used the new government tool, came out on the 10th of July 2024, and you can Google, check what registering for VAT may mean for your business on the .gov.uk site. Now, that's the actual link to the site that you can follow through. If you look on Linktree, you can see links to that as well. We're not going to take you through that site. We did that in video 1, but we'll just show you the results of what comes out when you put those exactly the same percentages in for the two different businesses. So this is the outcome that comes out when you look at the two businesses. Here we go. Changes to quarterly costs and profits. So on the VAT registered business, they pay £3,749 in sales, but they're able to claim some of that back, and that's that £487. So overall, after registering for VAT for the quarter, they're £3,262 worse off in the example we've put forward to you. So the profit would need to be reduced by 3,262, or the salaries would need to be reduced. And the non-VAT registered business, there's no additional VAT to pay, no additional profit. So we can see the difference per quarter, 3,262. So what does that mean for these two businesses? Well, in business 1, they're not VAT registered. It means they're not worse off for every quarter when they're not VAT registered. It means they can afford the labour costs of 60% of turnover that they've budgeted for. Business 2, on the other hand, is VAT registered. That means they're 3,262 worse off every quarter when VAT registered, or £13,048 worth off per year on a turnover of just £89,999. That's 14.5% worse off. They would have to reduce their labour costs to 45.5% of turnover to make ends meet. That's nearly 25% less for salaries. Doesn't quite seem fair. Our question is, why should an employee earn a smaller percentage of the money through the till because they collect VAT when the business next door that looks identical from the outside does not? Let's go back and now look at that if we scale this up slightly. So not registered business, but they've got 5 individuals within the same salon turning over £89,999 each. Now that brings the total turnover to £449,995, so just shy of 450,000. But there is 0 additional VAT paid on that. It would be 0% of its turnover. So the additional VAT of the value added in there would not be paid. It would be 0% of the turnover. Business 2, however, is VAT registered. It's one business within a salon, Turns over 449,995, exactly the same. As we said, the total turnover is 449,995. And that business would have to contribute an additional 65,240 in VAT. That's £15 for every £100 through the till, or 15% less income per 100. It's just too unlevel a playing field. Abolishment for VAT in our sector, or a reduction in the VAT percentage such as in Ireland, would go a long way to address this massive imbalance. It's our belief that without radical reform on VAT, our industry will struggle to survive. In video 3, we give you our plans and our ideas for showing government what they can do and what they need to do to tackle the crisis that's within our industry. Please comment below, and we look forward to seeing you in the next video.